Invest timing. If you want to learn how to save yourself from making the 12 most common mistakes in investing, watch this video. I'll follow in Warren Buffett's footsteps and admit that I've made some mistakes with my own money. Investors are the best people to turn to for guidance and information as you seek to achieve financial independence through the stock market. In order to succeed, you must first enter the market at the optimal time. Neither Charlie nor I care much about the Ben market as an investment opportunity. I think it was a mistake to keep trying new prices. We take an in-depth look at each company, but no one has ever gotten rich by predicting the stock market's movement, despite our best efforts. Making astute decisions about which firm to invest in has been crucial to my success, as it has been to that of many people I know. When investing, Buffett advises not to put all of one's eggs in one basket. You found a great stock, but then COVID happened, and you lost it all. Inflation and conflict drove up the cost of borrowing money and living expenses, but the company quickly diversified into a new, profitable business. Please excuse me. In my opinion, this is one reason why economic forecasting is so interesting. The strategy involves taking profit at high prices and stocking up at cheap ones. I guess it sums things up pretty well. In Warren Buffett's opinion, success can only be measured by two factors. Predicted future course of the market. It's not a matter of whether or not you should care. The question is whether or not you can solve it. Regarding when the next meeting of the Federal Open Market Committee will be, I haven't heard back from Jeremy Powell. Shit. It's one of the many things to keep in mind while trying to predict the market. The next logical question is, instead of what? By Buffett. He has stopped worrying about every possible disaster and is instead focusing on areas he can influence, such as finding trustworthy vendors offering competitive prices. When the wind is at your back, you can relax and enjoy the ride as your boat glides across the calm water. If you keep betting on the best vessels, you can expect your good fortune to grow. Second, after purchasing shares at a discount of 50%, you are given information about it. There was a monetary transaction of $100. They are suffering an unimaginable torment. See how Amazon stock has performed over the past 5 years in the table below. Arnold had a fantastic gain of 5% on his stock buy in June of 2022. In my mind, there are very few potential issues here. Considering how recently it occurred, I'm going to presume you had a positive impression. However, Ben has lost 38% of his initial investment when he bought it in July of 2021. During the past 5 years, Katie's investment in Amazon has returned a stunning 133%. It's not apparent if this has any bearing. Ben and Katie's Amazon share purchase date is important for Arnold to remember. As a result of this information, Arnold and Katie can make a sale that will ensure a profit, whereas Ben can wait until they reach break-even. As far as I can tell, nay is the universally accepted answer to this question. At this time, Amazon's future profits projections are the only criteria considered when deciding whether to sell or keep the company. Given that they don't give preferential treatment to any employees, if Amazon's sales were to increase by 50% in a year, Arnold, Ben, and Katie would all receive a 50% raise. A common error made by investors is to become emotionally tied to their initial investment amount. To simplify things, we've decided to no longer differentiate between the 133% winners and the 38% losers. Warren Buffett frequently recommends starting over. You will find out about a related mistake that is even more serious than the others Buffett has made. As for the third point, we anticipate rapid expansion. In my perspective, any business projecting annual growth of 15% is doing it improperly. While this is true, there is still a sizable proportion who do not. The sum is inconsequential. Bigger companies can get access to interest rates as high as 15% per year, compounded. That's not going to take place. However, as Buffett points out, assuming extremely high rates of growth is a folly. However, this is not a reason to stop being entrepreneurial. Buffett is seeking for businesses that can grow without tying up a lot of capital, while the philosophy on Wall Street during this era of low interest rates is to expand at any cost. That line of thinking will get you into trouble. 240 of the S&P 500 businesses have maintained or improved their stock price while reporting revenue growth of more than 15%. Really? Leverage is the only way for even the most astute and well-informed investor to get oneself into trouble. Why would you want to avoid using leverage as a matter of course? To put it another way, even if you're in a strong position right now, taking out a loan implies giving up power. Obviously, a person's level of job experience will be a factor. His knowledge of the merits of minimalism is also relevant. He will have access to whatever he needs to know about the company. In contrast to management consultants and investment bankers, he doesn't need to put in long hours of research before making important decisions, 3 listed above. Though paying close attention to detail is crucial, it's easy to miss the forest for the trees if that's all you do. A bottom-up strategy is invaluable, though, as I've discovered. Together with a cash flow diagram and a rough estimate of the company's current yield, this is a great example of the opportunities it presents. Following this, I'll compare my findings to those of other companies and make my final hiring decisions based on which individuals I think have the best chance of being hired. In 6th place is clearing a bar that is 7 feet in height. While it's true that some industries present more perplexing challenges than others, Charlie and I would much rather avoid dealing with the more intricate variety. Many people avoid using pi and instead multiply by 3 to get a rough estimate. This is more practical for our needs. There are plenty of dimwits in the business sector who believe their ribbon is worth more if they can clear a 7-foot hurdle instead of a 1-foot one. The fact that it runs counter to accepted wisdom about what it takes to succeed in various disciplines perhaps contributes to this misunderstanding. Finally, if you follow a few simple rules and don't take on too much risk, you may discover amazing success in the investment world with very little capital. We believe the Berkshire funds to be the most sensible choice. Why? Due to the fact that we can take the logical path and avoid the undesirable one. They move about so much that nobody knows when or where they'll show up again. Stop taking risks and closing off options, as they make you less vulnerable. Equity prices are decided by humans, so it's no surprise that they sometimes fluctuate in ways that seem irrational to outside observers. We'll go to work on a solution to this issue right away. As the 8th rule states, you should always be moving forward. If you think you need to save money every day, you're setting yourself up for disappointment. Such a company is no longer active in the modern day. Don't fall for too good of a deal. Who among us thinks our chances have improved? Athlete who plays a total of 365 games a year, or 1 game per day. It doesn't matter how often they publish books. Every writer is still a writer. Those that invest more frequently, even if only 5 shares per week or 50 shares per year, tend to do better than passive investors. You can't get standard, low-priced Coca-Cola as they have in Coke machines. The opposite is in fact true. There are times when you can take any risk and yet come out ahead, during bull markets, times when you need to be extremely cautious, during deep bear markets, and times when you have many opportunities but none of them are within your expertise, bull markets. When it comes to life, Buffett advises not to act like a baseball player who strikes out every time the batter is up. The fact that many people become wealthy on the best idea doesn't mean that investors shouldn't spread their chances over other possibilities. We've previously made a video about this, so we'll keep this one brief. If you really want to get down to the nitty-gritty of the matter, here is all the information you need. If you don't want to keep tabs on a specific company, you should diversify your holdings by buying an index fund. Whether you're a nothing investor, or focused on a select group of companies or industries, you may use this data to your advantage and outperform the market. There is little reason to believe that putting money into the 30 best performing companies in the S&P 500 will generate returns considerably greater than the index as a whole. Years ago, I shared the common belief that mixing 40% vodka with 30% rum would produce a cocktail that was at least 70% stronger. Adding anything less than 40% to 40% one would be a complete waste of time. Because no amount of effort will produce desirable outcomes. Sure. Even if Tesla succeeds in dominating the market for self-driving cars, the company's current market price may make it less tempting as an investment. When people witness others, particularly those in similar situations, succeeding at what appears to be a simple task, they are more likely to follow suit. When considering financial implications, this is the worst decision I've ever made. Tempted by my friend's wealth and his business acumen, I put a sizable chunk of my savings into an enterprise he hardly comprehended. The situation has not been resolved. If this doesn't turn out to be my most expensive mistake, I'll have to admit that I'm a moron. Lucky 12 is missing certain elements. Our inability to accomplish this represents our single worst failure to yet. You do something to make them real. Buffett often reflects on the lasting effects of his battle with Walmart. I made my first investment in the company somewhere in the early 1990s, despite the fact that its stock price was highly volatile. To begin, if a business is positive enough about its future that it is willing to ask for a 1.1x premium, it probably is. But Buffett never ceased thinking about how much he paid in the beginning and hoping that the stock price would go down again. I've never actually done this before. According to Buffett, Berkshire Hathaway's profits have fallen by $8 billion. He almost made the same mistake with Candy, who was one of his most prized possessions. However, Charlie Munger managed to change his mind. The year 2020 will always serve as a point of reference. Just picking one of the opportunities you've seen inside your area of expertise and sitting back is not a viable strategy. You put in some serious chewing time. Perhaps the harm you've done to your investment portfolio isn't on par with the 12 sins mentioned above. If you have any investing advice to provide, please leave it in the comments. In addition, you may read further about Warren Buffett's favored stocks here if you're curious. I recommend seeing this video. Everyone,